Hey everybody, hope you're all doing well. I know it's been a while since I've made a video, so I'm really excited to get to this today. In front of me today I have GBPUSD on the 15-minute time frame, and I'd like to break this trade down. I think there's a lot of value within the reasoning that went behind this trade. Now, full transparency, I was not able to execute this trade. I had it marked up prior to this move at the same time that I had marked up GJ. Now I decided to take a live trade on GBPJPY, and I did share that with the Discord community. The reason I didn't enter GU is because I didn't want to overexpose myself with two GBP dominant pairs. Of course, now in hindsight, this would have been the better trade. At the time, GJ looked a little cleaner to me, so that's why I went with that. But I'd still like to go over this as a case study because I think there's a lot of value within the move that happened here if I break it down for you all and go over my train of thought and my reasoning behind annotating my chart this way. Okay, so let's get started. Now, first of all, I'm going to hide this. As you can see, it's just under 11R. This was a really beautiful position. Let me just hide it for now. I'm going to go ahead and delete this and delete this. And I'm going to jump on the replay tool. Let's bring it back to about here. Okay, so let's see. I'm going to delete this too. All right, so the fundamentals of this trade are actually extremely straightforward, and it's the exact process that I teach within the ebook and the video course. Okay, so overall, especially on the higher time frames, we have clear bearish order flow, right? Clear bearish order flow to the downside, lower highs, lower lows consistently until right about here. This impulsive move here created a break of structure. Let me get my brush tool out. So this was the most recent structural point, and right here is where the break occurred, right? But that's not all I'm looking for. I'm not just simply looking for a break of structure. I'm looking for how price breaks the structure. And in this case, it checks all my boxes, right? So we have the break of structure, and it was created by a very impulsive movement. And that impulsive movement also created an imbalance or inefficiency in the market. Okay, so let me highlight that for you. Sometimes I like to use these little box tools just to highlight the imbalance. So as you can see, it's pretty straightforward. It's just from wick to wick. In between those two wicks, we see no battle between supply and demand, buyers and sellers. We just have pure buying power. Okay, demand was in control and there was no battle that took place. So that is inefficient price action. Whereas everything else, of course, is very balanced. It's up and down, up and down. All the wicks are touching, all the bodies are touching. Very efficient price action, right? This is what I'm looking for as inefficient, imbalanced price action. So because we have an impulsive movement that created imbalance, that was responsible for the break of structure, those are 3 checks off my list. Okay, so that means I'm looking for a trading opportunity right now. Instead of bearish order flow, the market is now showing us intent for bullish order flow. Okay, so the reason this is here is it's highlighting the point of origin for the move. Okay, the last point of demand before this impulsive move took place that ended up breaking structure. Now, there is a few different ways to look at this. If we just move this out of the way for a second, technically you could target the small bearish candle there. If you're more comfortable with it, you could simply target the absolute low to the absolute high of that bullish candle. So the absolute low right here to the absolute high right here. If that would make you more comfortable, then that's fine. Me personally, I just wanted to target the very last low momentum candle. That's all that matters to me, is that it's a low momentum candle and it's the very last one prior to the impulsive movement. So I had that highlighted. Let me just move the tool back. There we go. Looks about right. Right, so mind you, we're on the 15-minute time frame, okay? So this is certainly not going to be any sort of confirmation entry. I wasn't looking at the 5-minute or the 1-minute or anything like that. This was simply based on the higher time frame market structure and the 15-minute being my low time frame. Okay, so this would have been what we would call a risk entry. So one option would be to set your entry point, set your buy limit order at the very high of this refined demand zone. Right, so something like this. If you really wanted to, you could make a 15 pip stop loss to clear this low, but in reality, price should not trade that low, okay? This is our last point of demand, so if price violates that area, then I wouldn't be interested in this trade, right? So it's totally fine to keep the stop loss just below that level. In this case, it would be 9 pips. And targeting the most recent high, I'll go over that in a second, why I'm targeting there. But this risk-to-reward ratio, I mean, the risk-to-reward ratio isn't that bad, 5.62. That's pretty healthy, but 9 pips is a bit much for me. So what I would do in this scenario, especially because it's a risk entry on the 15-minute time frame, to reduce my risk further, I would move the entry point to the 50% of this refined demand zone, okay? So now that that's set up, let me just round this off to 5 pips. There we go. So this is actually exactly what the position was, 10.84, 54.2 pips as a take profit level and 5 pips as a stop loss level. So let me just briefly explain why I would be targeting this high for my take profit. So this is what's referred to as a weak high, all right? Now the reason it's a weak high and not a strong high is because it didn't break any swing points, okay? This is the swing point here. As you can see, price only made it to about here, right? So this is a weak high because it didn't actually do anything, right? It didn't break structure. It obviously broke this structure, but that's more of like a substructure. In the grand scheme of things, if you were on the 1 hour or the 4 hour, we'd be looking at swing structure rather than substructure. So this is classified as a weak high. Now what that means to me is that there's a very high probability that price will most likely surpass it, but at the very least, it should test the highest point of that high, right? So at the very least, it should meet that level and create equal highs. More likely though, it should break through that level. So just to be modest, I targeted that level. I'm not gonna shoot for the moon and go for a 20 to 30 hour trade. Not every trade has to be like that. Not every trade should be like that. You have to be realistic sometimes, and you know, just under 11% profit if you're risking 1% per trade, that's quite phenomenal. So this is a very healthy target for me. Let me just delete that right line. Okay, so let me play price forward and we'll go from there. Okay, we get tapped in. Let me move the position over. Right, so nice, beautiful entry. Barely any drawdown, just a couple pips of drawdown, nothing significant. And let's continue playing price forward. Okay, so this is a healthy sign already. Right here, we have a very minor break of structure. It would be more visible on lower time frames like 5 minute or 1 minute. I'm not going to bother marking it up and annotating it because it's just going to cause clutter. But yes, there was a very minor break of structure there, which shows bullish intent as well. And it shows that demand is, at least for now, being respected. So let's continue. Okay, so before I move forward, it seems as though there's a solidified high here, okay? Because price traded to that level and then started consolidating from there. So that creates a solidified high. So now what I'm looking for to gauge the health of this position would be a break of structure, a break of this structure, right? A break of this solidified high. Although it's minor structure, it's still structure. So as soon as that happens, I'll go through the steps of what I would do at that point. Let's see what happens. Now at this point, I wouldn't be doing anything with my stop loss. I would leave it just in place, just in case this consolidation decides to keep going lower. Oftentimes it'll tap into the entry and then take off without you. So if you move your stop loss to break even with no plan set in place, you could often be left very frustrated, right? So at this point in time, my stop loss would certainly be where I originally put it. Okay, so there was a minor break of structure that occurred. Let me mark that out. This solidified high was violated. Right, so that creates a minor break of structure. Now at this point, I'd be moving my stop loss right about here. Let me just label that SL for stop loss. Okay, now the reason being, it's actually the exact same as the reason this whole trade took place in the first place. All right, so the trade was taken because we had a break of structure, impulsive movement with imbalance. We were looking for price to mitigate the last point of demand before that move, right? The point of origin for that move. And that's exactly what happened. So this schematic, basically, this schematic here is basically the same thing as this, but on a much smaller scale, you see? So there's no sense in me keeping my stop loss down here because we had a structural high, we had a solidified low, and from that low, price gained bullish momentum and broke the recent structure, okay? So that's the exact same thing that happened here, but on a smaller scale. And there was actually imbalance created here as well. So theoretically, we can map out a demand level. This would be a very small, refined demand level. I guess you could extend it to that wick as well. But regardless, the point remains the same. If bullish order flow is intact, if demand is in control, then why should price violate this low? Why should it? Well, it shouldn't. And if it does, I wouldn't want to be in this trade anymore anyways, because that would mean supply is taking control. So at that point, I would want my stop loss to get hit so I could walk away with some profit and be on with my day, okay? So that's why my stop loss would be placed right here. Like I said, it's this entire trade, but on a smaller scale, right? The whole idea that was behind this trade on a smaller scale, and that's how we manage the trade. So my stop loss would be there. Now let's keep running the trade and see what happens. Okay. There you go. So just under 11R would have been achieved. I really wish I took this trade instead of GJ, because on GJ, I basically just got my risk out of the trade and then it reversed on me. So that was unfortunate. At the time it looked cleaner, but obviously, like I said, in hindsight, this was the better opportunity. But it is what it is. It's even more satisfying for me just seeing my analysis play out. I actually care about that more than the actual monetary results. So it's very satisfying to see this. And as you can see, the target was hit beautifully. Price just pierced above that high a little bit, most likely purging liquidity from all the double top sellers that have their stop losses just above this level. And from that point on, price just absolutely melted while I was sleeping. So I certainly couldn't have capitalized on any of this, but it's just nice to see how accurate this target was. So if we were shooting for like 20R, let's say, going after the high up here, then just look at what would have happened. We would have been very disappointed. So you can't just shoot for the moon all the time. You have to have a reasoning behind where your stop loss is as well as your take profit. The take profit is just as important. Okay, so we would have been taken out of this trade for full profit, and then immediately after, price reversed on us. Okay, so I thought this was a very valuable lesson to go over. There's a lot of good points within this breakdown. And like I said, this is exactly what's taught in the ebook and the video course. So please, if you're struggling with these concepts, just go over the educational content a few more times, take some notes, do some back testing. It's there to help you, and so am I. So I hope you guys enjoyed this video, and I'll talk to you guys soon.